Welcome to today's training session. Today we're going to be talking about how to DCA, how to be smart about it, how to DCA correctly, and how not to get wrecked under 100,000 market cap, because full sending your rent money is not a strategy. So let's go ahead and get into it today, boys. So today's agenda is we're going to first break down what the hell DCA is, because I know there's some of you that don't know what DCAing is, why volatility is your friend, common mistakes when DCAing, smart DCA strategy breakdown. We're going to show you chart examples with visuals, mindset and psychology behind trading, and how to stay cool during dumps and pumps, tools and resources. I'm going to show you guys some cool community tools that we're working on inside the community. I'm going to show you guys dexscreener for tracking alerts. We have risk management rules, Q&A, trade reviews. So I'm going to we can do some question and answers. You guys in live, when we're done with this, you can ask me questions and I'll answer you. So yeah, let's go ahead and get into it. So what is DCA? DCA is just dollar cost averaging, right? So basically, when you DCA, it's more like if you buy a coin at 100,000 market cap and it dips down to like 60K, but you see support on that level, if you DCA there, it's going to bring your average cost value down so that it's around like 80K instead of it just being 100K, right? So it's more of a strategy to spread out your buys over time instead of aping all in, right? So that's helping smooth out volatility and avoid buying the top, right? Because if you guys are aping your 100% full ape into the top of a coin, then it goes down and then it goes right back up. You're missing opportunity to keep farming the coin, right? So this is great for lower market cap meme coins, right? Where price swings are kind of like wild here and there. You can really farm the chart by DCAing, but this can also work in high market cap coins, millions. It doesn't really matter. DCAing can work anything, but it works better low market cap coins. So yeah, just think of it as a strategic patience. Buy smart, not fast, right? Because meme coins is not about buying as quick as you can. It's not about, there are people that trade new creations, right? And those people are just gambling their money away. You guys got to trade smart. If you trade smart, you'll start to really ape up your port. So why is volatility your friend, right? I know some of you guys are like, why volatility, my friend, bro? Basically, volatility in a high volume coin is your friend. And the reason is because low market cap meme coins are chaotic, right? But that's where the alpha lives, because when you see a big red candle, you can literally buy in and it's going to pump right back up, right? Because when there's a lot of volume in a coin, as soon as everybody sees that big ass fucking bear candle, they're going to fucking buy in as soon as they can, right? So if you're patient enough, you can wait for those red candles, right? And then you sell on the top of them for like 40%. It's the easiest way to scrape, right? And you want the red candles. Don't fear dips. You gotta embrace them, because DCAing only works because of volatility. Every dip is a chance to lower your average and gauge size at a discount, right? Because as you DCA, right, you keep buying those dips. And what happens is eventually if the coin goes up, you're going to be up fatter than you would if you just aped in at like a higher level. So, and also avoid emotionally buying. There's a lot of you in here and a lot of you that are watching that like you guys just emotionally buy a lot of coins. And this is very bad, and this is usually why people, blow their ports. High volatility messes with your head a lot. You'll see pumps and feel FOMO. For people who don't know what FOMO is just a meaning of fear of missing out, right? So you'll see pumps and feel FOMO, or dips and feel fear, right? That's everybody feels that, but you guys got to stop that, because if you guys have fear when trading meme coins, it's the worst thing. It's just like anything. Trading 101. Trading 101 is not to feel fear when trading. You guys got to stop worrying about fear, stop feeling FOMO, and actually just worry about playing smart plays, using order blocks, DCAing, right? That's what you guys are learning here in the minnows, right? So DCAing helps you stay calm and follow a plan instead of reacting to whatever the chart's producing. If you forgot to buy in, or you didn't feel like buying in, the coin started pumping right away, right? You get that like, oh, I need to buy this coin as soon as I can, right? But instead, if you use DCA and order blocks, having strategies to follow, it helps with that, right? It helps you not have fear. So scaling in equals weaponized patience. So instead of aping into a candle, you scale into weakness, right? Which means weakness is just like a really like low part of the chart, right? So if a chart's at like 200K and it went all the way down to 100K. It went up to 130K at like in one, like let's say you're on a 5-second chart. In 5 seconds, it hit to 130K, right? Most people are gonna buy there. They're gonna buy into strength. No, you gotta buy into the weakness. The weakness is when people sell, right? The bears start selling, right? They start going for the fish. They start selling, right? Right? The bulls aren't picking it up, so it starts going down. Now it's at 110K. That's where you want to buy. When it shows the weakness, that's where you buy, and then you ride the strength, right? That's what I mean by that. And an example would be if a coin pumps from 50K to 200K, dumps to 80K, the person who DCA'd across the drop has a better average and is back in profit quicker than the top buyer. So that's how that works. Common, I spelled common wrong, don't mind that. I must have I type at an angle, so it's like it's weird sometimes, but I get to see it. Anyways, common mistakes when DCAing. Yeah, common, right? Fucking dumbass. Anyways, common mistakes when DCAing. These are the reasons most people lose their bags even when they DCA. Right? A lot of people go on 50% on the first dip. You guys are buying 50% of what you usually would. If you guys have a soul, you are going to buy half a soul on the first dip. What are you guys doing? Like, let's be honest. What are you guys doing, right? Because that kills your flexibility. That means leaves you barely any room left to buy better entries. Right? If you were to do 20%, 25%, that's like 0.2, 0.25 soul, right? If it moons, you're still up. You're still up 4x. That's a soul. But if it goes down and it sees the support level on, if you, strategies, support resistance levels, you'd use those to your advantage. And if it DCAs down to that point, then you could literally DCA another 0.1 or 0.2. That way you're getting discounted. It's basically like buying discounts. Like, you're discounting like 30% of your fucking average. It's super cool when you actually do it correctly. So start smaller. And make your first DCA the least aggressive. So when you guys get off of this, I need you guys to start small, right? Don't be aping at souls. Just start small and make your first DCA the least aggressive to get a feel for it, right? Saying it dipped, let me buy more is not a strategy. I know there's a lot of you in here that are saying, oh, it dipped, man, let me buy more. That's not a strategy, bro. Like, what are you doing? Like, you're gonna keep losing if you keep doing that. You're guessing. There's no logic, no zones, no edge when you do that. Right? So you got to use chart zones, previous support levels, order blocks, OBs, which are order blocks, and plan your entries, guys. Don't be just blindly aping into coins just because you see Cupsy or you see Scented or you see Vladimir or you see any of these big KWLs buy into a coin. Don't just blindly ape. Use your own strategies. Use DCAing, order blocks, support zones, all to your advantage, right? Because you can't DCA if you don't know your average, right? Like, if you didn't buy into the coin, you can't DCA anyway. So that's like anybody that thinks they're DCAing just because they buy into a coin on a dip isn't what DCAing is. It's just lowering your dollar cost average, right? If you're guessing, you'll panic sell at a loss, or worse, hold a dead bag, right? So if you're just guessing, oh, well, it dipped, so let me just DCA here. Oh, it dipped again, let me DCA. And it keeps going down, you're eventually going to panic sell at a loss. Or worse, you're going to hold the dead bag because you think that it's a good coin. So I put in here to use simple Google Sheet or a tracker bot. I don't know many tracker bots, but I know there are some, right? I don't personally know much, but I know there are some. But you guys can also use Google Sheets to track, what you DCA'd on, what you guys, what was the outcome of it, right? The next thing is people panic buy after a small pump, because they don't want to miss it, right? A lot of you guys are buying after a small pump just because you get FOMO, right? That's bad. Never do that. Because that's how you end up DCing into strength, which equals a bad average, which I went into. Remember, guys? I went into that. Don't buy into strength. Buy into weakness. The fix for that is only add when you are calm and the chart is weak. When you guys are at a high, like, it's kind of like, trying to figure out how to explain it to you guys. When you guys feel like you have you shouldn't get into a coin, right? Intuition, you guys shouldn't buy into a coin. Never buy into a coin, right? It's better not to have an entry than it is to risk losing an entry because you had intuition. Because I get all intuition all the time that tells me, oh, I should not ape into this coin, and if I ape into that coin, I'll usually lose on that coin because either one, if I see a red candle, I'm going to instant sell because I already have that bad feeling that I should sell or I shouldn't get into the coin, so I'm going to sell. If you guys trade calm, level-headed, and buy into coins, you guys are going to be less freaked out when you see a red candle, and you guys aren't going to like freak sell, right? You're not going to fear sell right away. If you're DCing a free fall with no signs of strength, you're just bleeding slower, right? So like that's like taking a knife to your fucking stomach, and every time you DCA, you just fucking keep stabbing yourself. You just keep stabbing yourself. Every time you do that shit, you just keep stabbing yourself, right? Like, guys, never DCA into a free fall. What I mean by free fall is when you skydive, right? It's like a red candle. It just keeps going down, right? The chart just keeps going down. It's just free falling. Just free falling. Never buy into a free fall. And I'll go into what that looks like in the chart examples and everything. A good DCA setup shows signs as holding support, volume shifting, and slowing the sell pressure, right? The bears aren't selling as much. The bulls are coming in, right? The fix for that is look for signs the sellers are exhausted, right? So look for signs that the bears stop finding fish, right? Or the buyers are stepping in, right? The bulls are getting rampant, right? That's basically the common mistakes when DCAing, right? That's what I came across whenever I DCA. That's what I've heard from people. So in terms of common mistakes, we're finished on that topic. Smart DCA strategy breakdown. Now, this is just showing you guys the smarter DCA strategies that I use sometimes when I DCA. So DCAing isn't just buying dips, like I said. It's about planned execution over time. You're building positional strength, not gambling on one piece. So break your capital into 25% of the top of your zone, right? These are order blocks. 25% of the top of the zone. Now, it can be order blocks. It can be, you just DCAing, right? But 25% of the top of your zone is your initial nibble, right? You're just getting a little nibble of it. 25% is your mid zone. That's your strongest support or an order block retest. 50% at the bottom. This is your deepest zone, and it's where you have the most high conviction, but it's also sometimes the worst case fill, right? So this lets you scale into weakness and catch better entries while reducing risk at the same time. So what you guys need to do is you need to find previous support zones or order blocks from big green moves, right? Drop your DCA levels below the current price, never chase. What this means is, like I said, DCAing is dollar cost average, your cost average levels below the current price. That means if a coin is at 50K and you DCA'd at 40K and you're thinking about DCAing again at 50K just because you have high conviction on the coin, you should not be doing that, right? Never chase a market cap. Never chase the current market cap. Think like a whale. Buy where people are scared, not excited. When people see big red candles, they get scared because there's a lot of people holding, right? Don't buy when people are excited. When people see a massive pump from 200K to 300K, everybody gets excited. If you're buying in at those levels, you are at a 70% risk of losing. Maybe even higher, really. 90%, because 10% of the time, yeah, it can keep pumping if there's a lot of volume, but it's not the smartest idea, right? So set your DCA levels and forget the chart for a few hours. Now, I've been telling a lot of people to start doing this, people that I mentor or people that I've mentored in the past, right? You need to think like a whale, or my bad. You need to set your DCA levels and forget the chart for a few hours. If you just leave a stop loss at like 30%, you buy in at a good order block, right? And what can happen is the next time you come back in an hour or two, the price could probably be 3x, or it could just hit your stop loss, right? You guys shouldn't be mad that it hit your stop loss at all, because there is that 20% chance that you will lose on a trade, right? That's 8 out of 10 coins. If you did 10 coins a day and you set sell limit orders for 10 different coins, it's probably only going to hit it 2 to 3 times on those coins, and the rest of the coins are either going to hit a 2 or a 3x, or maybe even higher if you keep holding. So my next thing is let price come to you. do not babysit or panic adjust. This means that when you set an order block, don't just sit there and babysit it or panic adjust, right? Wait for it to come to you and then buy, right? So buy limit orders are your best friend as well, right? That same works with vice versa for selling as well. Let the price come to you. Do not babysit or panic adjust. And when I mean panic adjust, is if you have a stop loss and the coin is going up and you want to set a trailing stop loss manually, right? Do not panic adjust it just because the coin is doing certain things. So, and also, if the price pumps without you, it wasn't yours. Wait for the next time, right? Just wait for the next time that the price comes down, then buy, then that price pump can be yours, right? So now we're going to move into chart examples. Okay, so chart examples. This is what a good DCA looks like. We bought at around, let me grab the pen real quick. We bought at around 100K. So right here, you can't see my buy because it's faded into these, but we bought right here. Not at the top as it shows right there, but we bought around 90K. I seen the coin, we didn't sell up here because we had conviction. It dropped down to like right here. So I DCA'd at like 50K. It went up, it went down to like 20K right here. So I DCA'd again. I had conviction on the coin, so I kept running, right? I don't know why I just did that. What the hell? Anyways, the coin kept running, and I DCA'd once again. I keep lowering my cost average. Before it was 90K. Remember, we can do like a little line, like 90K. Here's my 90K average, right? Every time I DCA, I'm lowering that, and it gets lower and lower and lower to the point that it's sitting at 40K, 50% less than what my first top grab was, right? And then what you can see is the coin started pumping like crazy, sold a little bit right here, sold a little bit right here, probably sold initials up here, right? So this is what a good DCA looks like. Now let me show you what a bad DCA looks like. This is what most of you guys are doing if you think you're DCAing. You buy a coin, right? You buy a coin in the top blast, boom. You think it's going to go up, it doesn't go up, right? Keeps reversing, shows a reversal, but shows a reversal, but you keep staying in it because you think you have conviction. You buy again, what happens? It keeps dropping, right? There's no stop loss limit order right here. No stop loss right here, right? Now you're just buying, now you're just blindly DCAing. Bam, you buy again, you sell, then you buy again. Bam. You try to sell again, right? Because then you see, oh, it's on the top. Now I'm trying to make my profit back. Then you buy again, right? To buy at the top again. Then it drops lower, so you sell again. This is a bad DCA, right? This is not what you should be doing at all. So where would you DCA on this, right? So let's say that, let's just say you bought like, let's say you've seen this drop big, right? Oh my god, it just dropped huge. So you buy right here, right? You do a little buy right there. It pumps. You keep holding because you think it's going to go higher. Then it starts dipping, right? Oh, shit. Oh, shit. Now you're in a loss. It just went from, let's see, you aped in at 100K. It just went from 100K to 70K. That's huge. That's 30% almost. That's a little bit more than 30%. That's like 40%. 40% stop loss. Right, so if you guys are setting stop losses, your 30% should have acted like right here. But if you wanted to get back into the coin because you had conviction, or let's just say you kept holding, you would probably want to buy again right here because it's at a nice low, right? Nice low, right? Then it dipped lower, right? So you could keep holding your bag maybe, or you could DCA again if you really have strong conviction. And then you don't want to DCA if your current average is right here. If your current average is right here and the coin starts going over it, never DCA ever here. Never. Right? So then you could have sold on the top, right? We could see a reversal happening. This is a reversal candle, right? You can see some apes. So let's say you kept holding, you were bullish on it, you kept holding. Some people were aping, but I really wish I could erase the bulls. Okay. Apparently he's messing with me. There's the eraser. Yeah, it's not working. I tried it. Anyways, we could see that the bulls tried to take, like, they got it, right? But the bears were really strong, and we could tell by this candle. Which means when we see our next red candle, that's probably where you're going to want to sell. Which means you would be in profit instead of being in a loss, like somebody that's going to keep holding this dead bag and try to at least make 0%. At least here, if you aped, like, let's say 0.2 right here, and then you aped 0.1 right here, and then another 0.1 here, right? So that's 0.2 at like an average of like 60K. You could be up double, right? So you'd make double, which is 0.4, which means you would bank back the 0.05 that you lost. Oh my gosh, this is messing with me right here. Anyways, you would make back everything you lost just by DCAing, right? Which means you're going to be in profit instead of the loser, Brokey, that kept holding his dead bag up here and then selling over here, or like selling up here or selling down here. So that's where you would DCA, for anybody that's wondering how to DCA when you do it. I will not do DCA live. We would do that when we scan or when we do other things, because in certain cases you can't just DCA. You can't force a DCA. DCA has to come to you. Remember what I said? Price has to come to you. You don't chase the price. So the next thing is mindset and psychology behind trading these type of coins. Most people panic when their positions go red. That's something you do not want to do. You do not want to panic just because your position goes red. Smart DCA traders see red as a discount territory. Like I told you guys, DCAing is like having a discount sale going on, right? If you have conviction. Being red temporarily is normal. Expect it. Plan for it. I'm going to say this again. Being red in a coin is temporary and it is normal. You need to expect it and you need to plan for it. If you are not okay being red for a little bit, you will always buy late. I'm going to say this again because I need some of you to really remember this. If you are not okay being red for a little bit, you'll always buy late into a coin. Because you are not your P&L. You guys need to stop relying or looking or using your P&L as a dopamine rush. Your P&L means nothing to you. It needs to mean nothing to you. Until you exit your trade, that's where you can look at your P&L and be like, okay, I just made a 2x. I'm going to get my dopamine off of that. I'm going to get my little win, right? Stack your wins like I tell you guys, right? So stop refreshing the chart every 30 seconds just because you want to look at your P&L, right? You need to practice. You need to also practice price indifference until your full DCA fills hit.
Wait, what? How are you not dead?
So think in zones, not outcomes, and candles, right? Think in zones and outcomes, not candles. Super simple.
No.
So you spent time building your DCA levels, you need to trust them, right? So as you keep DCAing, your brain starts to really learn how to DCA correctly. And as you keep building those DCA levels, you start to get self-trust. And that just allows you to trust yourself, and when you DCA, that you know those DCAs are correct and they're not just little gambles. So let price come to your entries. Like I said, and another one, let price come to your entries. Do not chase breakouts. What do I mean by breakout? A breakout is when a coin all of a sudden gets relative volume, and the relative volume is super high, and it starts to really ramp up. Don't just buy into it. Don't buy into the strength. Always buy the weakness. So, if it pumps without you, that was not your trade. Miss pumps are cheaper than bad entries. If a coin pumped to 150K from 80K and you bought 130K and all of a sudden it started dipping back down to 100K, you just lost. That's a bad entry. Missing those type of pumps, like I said, are cheaper and free instead of losing on a bad entry. Because a lot of you guys, if you put a soul into a bad entry, that could be $40 lost, depending on how much soul is. And we'd say the average cost of SOL, just to keep it simple for you guys, is $100. A 30% loss is $30. And a lot of you, that's a lot, right? So, and drawdowns test your conviction, not your skill, right? It's always testing your conviction levels, not your skill levels. So you need to focus on position building, not I must win now, right? A lot of you guys are like, I need to win now. I need to win right now. You guys just need to focus on position building, setting, and forgetting, right? Would a CEO cry if one product launch failed? No, right? No, of course not. He's not gonna go, oh, he's not gonna go moping like, oh man, like that product launch, man, like it failed, fuck. Because everything else after that, it's gonna be fail, 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 because of his mindset. If your mindset says, okay, this one failed, but I know and I trust myself that I have a 90% chance of actually winning, because that one loss is not bad. If 9 out of 10 of his products were successful and only one failed, do you think he's going to be mad? No, of course not. Of course he's not going to be mad because one product failed out of his 9. Right? That'd be stupid if a major CEO like Nike got mad because one of their product launches failed. They're not going to be mad. Right? So, the next thing after that also follows into this is not risking it all on one trade. Do not let one bag ruin your week, because trading is psychological and the deeper subconscious level, right? We have the conscious, subconscious, and there's an even deeper subconscious level that affects your actual subconscious, which then affects your conscious. And that's a story for another time for when people want to know. But basically, when you full port into something and you lose your whole bag in 2 days, that ruins your whole week. But that's because you guys aren't using strategies. You guys are just blindly aping, using you're emotionally trading, right? So that's all bad. And you guys need to journal trades and review your entries like post-game footage. All my gaming buddies in here, you guys are deep into gaming, right? A lot of people in here who, if you play Fortnite, a lot of you guys review your post-game footage all the time to see what you can get better on, right? You guys need to start doing that with your entries. You guys need to review your entries like it's post-game footage, right? Because if you're in a cash cup, right, and you're wondering, fuck, man, why didn't I get into the fucking 10th circle and there was 20 people left? What could I have done better to rotate in between those? And you're going to watch that video back in post-game footage, and you're going to be like, oh, okay, that's what I could have done. And you're going to write it down, right? This falls in the next one. Journal your trades with thoughts before and after your DCA fills, or before any trade. If you took an order block trade, order block entry, if you took a regular entry off of falling into the weakness of volume, but weakness of the chart, right? Just write it down, journal it, because journaling will help you. And when you're to learn, right? You're going to learn like 3 times faster than you would if you didn't journal. So you also need to use affirmations like, I don't chase pumps, red is part of the strategy, and I'm building an average, not guessing the bottom. I'm going to say this again. You need to use affirmations. Now there's some niggas in here that are going to say like, oh, affirmations are gay, Sleepy. Oh, man. Like, those are so stupid. Those are for women. You're never going to make it, nigga. You're never going to make it ever in your life. Anything. This goes to everything. Everything. You need to be saying I and I am. Because every time you say I or I am, you're putting it out that you are that to your subconscious. Because your subconscious can't tell the difference between thoughts and reality. Your thoughts become reality if you have emotion behind it. And that only happens... Your reality is what you're thinking and what you're emotionally thinking. If you're emotionally thinking that your reality is you always are a bad trader, you're going to get bad trader. If your reality and you emotionally think that you're a good trader, you're going to start taking good trades. So you guys need to think, I don't chase pumps. Red is part of the strategy, and I'm building an average, not guessing the bottom. End of that. Next thing, tools and resources. It's just a little bit of tools and resources, right? We have the community, obviously. You guys can check out Training Zone, the Training Zone forum. We have a vault, right? I'm constantly adding to the Training Zone forum. You guys have a ton of resources in there, right? Like I said, I'm still adding, Right now, I think there's at least an hour or two of useful information in there, and it really works. Right? We have some people that have already gone through it all, and have already said this is the most I've ever learned. Right? Dexscreener alerts and watch lists. Use dexscreener to your advantage. There's a lot of people in here who do not use it. You guys need to start using it. If you guys buy into a coin, set and forget like I tell you to. If you guys want to have alerts for when a coin does certain things to know when to sell, like let's say you're in a coin, let's say you want to set an alert for 300k from 100k. That's 3x. Bam! Alerts you while you're on the phone. You can quick sell 100%. 3x. Bam! You just made 3x while you're out on the road. Instead of coming back and the coin is at 1.5x because you missed an alert. Yeah, we already went over the Discord or block zones, community scanner bots. I'm adding still bots that are going to track pump fund volume, right? It's going to follow volume. It's going to alert you when something hits, 30k, 40k volume, something goes over 10k market cap, meaning a dex paid bot, meaning boost bot, right? It shows you when dex gets boosted or something like that. And I'm still working on that, right? You guys also need to be showing entry log spreadsheets, right? So you guys have spreadsheets of all the coins you've done, how much you made, what your P&L was, right? This is going to help you when you overview it for the day. You can either use Google Sheets or Notion for that. So, risk management rules. These are like risk management rules I will follow when trading, and this has helped me a lot when I was deep into trading and I just started really, really getting a hang of it. You're not Cubsy. As much as you guys want to be Cubsy, you guys are not Cubsy, right? You are not Cubsy. All-in trades are emotional bets. You guys are not at a casino, right? You're not betting on a fucking roulette, fucking rolling red, hoping and praying that it rolls on red. This is strategic trading. You guys need to stop being emotionally invested in betting as much as you can. Even the best looking setups can get invalidated by news, bots, or liquidity vacuums. Say this again. Even the best looking setups, the best looking charts can get invalidated or bombed by news, bots, or liquidity vacuums. Bots ruin charts, right? News can ruin a chart. And the goal is survivability, not just gains. You guys always are worried about gaining instead of actually trying to survive through the trenches. The trenches are tough, man. Trenches are tough. You guys need to survive through it and not just look for gains, not just look for kills. Example, you go all in at 80,000 market cap. Price nukes to 40k. You just lost 50%. However, with a DCA plan, you'd be averaging down. With all in, you're stuck or you're cut deep. So if you only aped a little bit at the top, price nukes down, you have good conviction, or if it's a really high volume coin, DCA at 40k, what's that going to do? It's going to bring your average from 80k to 40k, then it's going to go to like 50, 60k average, right? So if it goes right back up, what's that? You're just in profit way quicker than the person that's staying and aped in all in at the top. And meme coins are highly volatile. All of them are. It doesn't matter which one you're doing. They're all volatile and often illiquid. What does that mean, right? Meme coins are highly volatile and often illiquid. Illiquid is just basically like the coin falling, free falling all the way down, right? It's highly volatile, but the coin is losing volume. But the market cap goes up, but it's losing volume. So it's a dead coin, right? And you never want to risk more than 5 to 10% of your total portfolio on one token. All of you guys in here are risking so much of your portfolio on one token instead of just doing 5 to 10% per coin. If it moons, you still win. If it rugs, you live to trade another day. Right? If it moons with 5 to 10% of your total portfolio, you're still up, bro. You're still up. But if it rugs, or goes down, or free falls, you live to trade another day, and you're not going to worry about it as much. You guys need to know exactly how much you're willing to lose before you place your first buy. How much are you willing to lose before you place your first buy? If you are willing to lose $30 in that buy in by all means, right? You're gonna have more confidence when buying. Don't adjust your mid drawdown. That's how you spiral downwards. Write it down or lock it in your notes. I will cut if this hits X price or X percent drawdown. I will DCA only up to a certain amount, then reassess. Instead of market selling in panic, set smart alerts, right? Smart alerts instead of market selling in panic. The hardest part is not setting the rules, it's following them. I'm gonna say this again. The hardest part is not setting or writing down the rules, it is following them. Because all the best traders sometimes do not follow their own rules, like me, right? Sometimes I don't be following my own rules and I will lose, right? And it'll be a big loss, right? So to keep that from happening, you guys need to follow the rules. Write down the rules and follow them. You'll always feel like bending them. Oh, just this once, man. Just this once. This coin is so good, man. This coin is so good. I have to top blast. Don't. Very bad. Super bad. Horrendous. Right? Risk rules are not restrictions. They are freedom tools. So, max 10% per coin. Never all in. Preset your max loss percentage or price using DCA strategies and not revenge buying, and use your alerts, not your emotions. My final tips and takeaways before we move into question and answers for you guys that are in the live. Track your entries. If you're not journaling, you're not learning. That's a bar, write that down. Zoom out. One bad play will not ruin you, but undisciplined habits might. You guys need to keep showing up. DCAing is not just a strategy, it is a mindset. Because the edge isn't just technical, it's mental, emotional, and habitual. So, thank you guys for tuning in. For the people that want to ask questions, and for anybody that's watching this not live, if you guys want to stick and stay tuned for the questions, you guys can go right ahead. So, we'll move over to the live chat here. So it seems like we have some. So we have Viat asking, what's, okay, but like, what if you're doing 0.1, don't you gotta do it like 0.025? Okay, so these rules apply to people that have at least 0.5 or 1 SOL in their port. If you're doing 0.1, it's a little bit more challenging. You do have to do 0.025 or 0.05 buys. But I would never recommend only using $13 because a lot of you guys literally spend $20 on DoorDash every day. And you guys could just be buying SOL with that. So I don't want to hear anybody that is like whining that they can only buy 0.1 unless you're a fucking child and you're like 12 or 15 years old and you can't get a job, right? Like, stop whining because you have low port. Get your fucking port up, do a half, 1 SOL. Do 10% max buys into coins, DCA correctly, and you'll be up. Your port will be up no matter, like, in no time, right? $20 in DoorDash is crazy. Man, these people are crazy. You don't even understand. Most of these people are spending $30 to $40 in DoorDash, man. These people are crazy. Yeah, once you get a job, you're cooking. Yeah, I've been seeing you, bro. I've been seeing your win. Like, now your wins. Yeah, I've been seeing everything you've been doing, man. I've been keeping an eye on you. You've been doing great. I applaud your effort, man. What are crucial tools to use on the side and have ready before you jump in on a trade? So, a crucial tool to use would most likely be order blocks and DCAing. DCAing, order blocks, support and resistance zones, right? So, those are tools you should be using before you jump into a trade. Blake, shut my door, bro. Why you keep forgetting? Shut my door. Hurry the fuck up. Is there sites for tools to have running you recommend? I don't use any tools. The only thing I probably would use is TrenchBots, and that's in the middle vault. I don't use any tools except for what's in Axiom. And TrenchBot is, yeah, it's cooked right now, so I haven't really been using it. So everybody in here, if you guys still have questions, let me know. Do you have an opinion on Trojan? Trojan is horrible. Just use Axiom, instant trade panel, super easy. Yeah, SoulScan works as well, you know, learning if the bonding curve false or true, learning if that's locked or not. Yeah, for anybody in here that's using any trading bots, Nova, Bloom, they're all just supported by big KOLs, man. Just use the Axiom instant trade panel. It's so much better. Will you have any issues using Axiom in the US, bro? What do you mean? Literally, like 60-70% of the fucking population in Axiom is from US, bro. I'm in Miami, bro. Of course it's okay. Baba asks, can you explain this? Pump from 10k. Yeah, I just got done explaining that that's the bot I'm working on. It will be showing everything that is over 10k market cap. Like anything that reaches over 10k market cap. The best way to get people to use my Axiom ref, use mine. That's the best way. Well, I don't know what you mean, JM, because everybody is in the US. Literally everybody. Like, all your favorite KOL traders are in the US. Everybody lives in the US, man. There's barely any foreign people in here. Or foreign people that use it. Yeah, just go to my profile. If you're on mobile, just click my profile. I'll type in chat so you guys can. Just click my profile, and then in there I have an Axiom. It says Axiom, and then it shows the link. Just click Axiom, and do that, and then you can sign up with Axiom. Even pull it up here. If you want it that way, if you don't want to go to my profile, I can just send it through here. That's Axiom, best trading fucking platform in the world right now. Yeah, I don't know why people say Axiom is too difficult, man. Like, they're just brokies, man. Just brokies. You're broke. Axiom is difficult for mobile. Yeah, but I know they're working on it. Like, they're slowly making it better. Yeah, Axiom is definitely the next best thing after Photon. Yeah, next live, we can definitely go through research tools like SoulScan and dexscreener in depth. Totally. We can definitely do that, man. Let me write that down. Alright, so anybody else that has any questions, please let me know. We'll be ending the live in like a minute. Unless you guys have any serious questions. Alright, man. Appreciate it, Reezy. Appreciate everybody that tuned in for the live, everybody that is tuning in for the recording and finished the whole way through. Thank you very much. And we will see you guys in the next video. For everybody on YouTube, make sure you guys subscribe, comment down below your favorite timestamp of the video, write down your notes as well. Yeah, thank you guys.